The Australian Stock Exchange is itself a takeover target tonight after a friendly offer from Singapore worth more than $8 billion. The deal would create one of the world's top exchanges, but there are several approval hurdles that could see the marriage of stock markets delayed until well into the next year. Peter Lloyd reports.
The name on the building won't change, but today's announcement means much else will.
Well, certainly this is one of the most significant and one of the most dramatic events in the history of financial services in Australia.
The ASX will cease to be an all-Australian outfit. The new owners, the Singapore Exchange.
And we believe the new group we endeavour to create will be a very competitive global exchange force to be reckoned with.
ASX shareholders have reason to be delighted. Their shares are valued by the deal at $48 each, up almost 40% on Friday's trade. The combined business would be the world's fifth largest bourse, with a combined worth of $12 billion.
Yes, there have been cross-border exchange mergers before, but never a consolidation arguably involving the East and the West. And moreover, never one positioned as this new group will be in the fastest growing region of the world.
It follows a wave of consolidation around the world as stock exchanges respond to increasing competition. Singapore's small size has until now thwarted its ambitions to rival Tokyo and Hong Kong as a regional financial centre, and the ASX is set to lose its monopoly from next year.
It looks like a done deal. It's an agreed deal. The Singapore Exchange has offered a very, what some people are describing as generous premium to buy the ASX. The ASX board have agreed the deal, but the big problem for them now is to get through a lot of regulatory hurdles.
Under corporations law, the mechanism of the takeover requires judicial as well as several other forms of approval.
Court approval is also going to be required, approval of the Foreign Investment Review Board, which makes a recommendation to the Treasurer, approval of the Australian Securities and Investments Commission, approval of ASIC's equivalent in Singapore, the Monetary Authority of Singapore. And very importantly, of course, the merger implementation agreement makes reference to either a regulatory amendment or an amendment to the Corporations Act going through Parliament.
The ASX will remain a locally listed and regulated entity, but it will in effect be one quarter owned by the Singapore government. If all the hurdles are surmounted, the tie-up could be in place before the end of next year. Peter Lloyd, Late Line.